Good morning, everyone. Well, the title says inflation numbers improved. Markets kind of shrugged, yawned. Wasn't enough to get them moving again. Actually, flipped around a little bit, and you can see them moving a little bit lower, not a big deal. So they moved up a decent amount over the last few days. And yesterday at the gap up, momentum stalled, narrower range bar than what it was the prior day. Um, just makes sense. Things are going to stall. Yesterday, we talked about the fact that NASDAQ was up against the prior pivot high. Um, internals, they've just been at a slight extreme, really not too much of a concern, but I would have thought this breadth would have improved, and it didn't. So we're getting signs that the market's getting a little tired, normal. Other thing mentioned yesterday is the distance prices have moved over the last couple of weeks. That look, the market's going to correct at some point, and maybe since the quarterly options expiration this week, it tends to be an inflection point. And with the markets having moved as they are, it would make sense, right? Some kind of pullback. But the nice thing is that they've got a decent distance away from any significant support. So while I don't know that they would hold above this line here, that little shelf, still a major support point. The pivot is way down here. And so it's got some room to pull back toward the rising moving averages or whatever you're looking at, people that might look at fib levels or who knows what, besides just the price action. It could pull back a decent amount without doing any real damage. And the S&Ps anyway have room to move up. So, that's all a good sign. So maybe Fed day, as you all know, probably toward the end of the week, whatever happens, if things move up, time to start trimming things off. Maybe selling covered calls on things that have done well. S&Ps, as you know, they're not going to be moving very much. And usually, my memory serves me well, things tend to move up a bit ahead of the announcement, or maybe it's the first hour or so, and then do nothing. Again, they've been moving up for a while, but they could maybe go up a little bit further. And you can see the weekly chart, a few weeks up in a row. Things are a little extended from the moving average. It just makes sense that we're getting closer to hopefully a reasonable retracement. Right? There's nothing going on yet that would suggest anything more than what would be a reasonable retracement. SPX, this is interesting today. How far away? And I guess it's because of the Fed day. I'll look at the numbers to see what they say here. 4270. Wow, Jake, that's pretty low. I guess as things come down a little bit from what I had taken note of. There's no juice at 4270. I'm not going to be able to get anything there. It's 25 by 30 cents. I guess if things sell off, if that's what you're anticipating. But 42.95 is 75 by 85. And so while that, you'd want to be, no matter what, before the announcement comes, things are going to flail around. But look how far away the premium is on the upside. Right now, that is 50 by 60, so 44.45. It just seems impossible that it's going to get up there by 2:00 today. It looks more like a no-brainer. Hopefully, whatever, it just jiggles around there. The premium evaporates enough to close it before the announcement. But there was a lot of calls being bought yesterday. that were even expiring yesterday. So I think the bullish sentiment, even though it's not reflected completely here, looking at those options and the volume in strikes well above, things are getting a little bit maybe too bullish. I mean, there's open interest at 4,500 expiring by the end of the week. So, can they possibly get to 4,500 by the end of the week? That would be, I think the only thing they could possibly do that is if the Fed lowered interest rates, and that is totally, unexpected and not even being talked about. But someone is buying those out of the money options, thinking that, hey, I don't even expect it as a lottery ticket, seeing what the bid and offer it is, what you pay for them, but somebody's doing it. The largest open interest right now, expiring by the end of the week, is at 4,300. So you've got a very good floor under here, no matter what happens. And we'll see what other markets are doing. $42.70. Reading Jake's comment. $42.70. Oh, I see what you're thinking. Okay. All right. Selling the spread 70 by 95 for 55 cents. I get it. All right. NASDAQ futures down a little bit. Not a big deal. But again, seeing some selling coming in. Look at the wide range bar popping above those pivots. And so money, coming out, some selling going on. You can see a little pullback there. Same story in the Russell, but this has got plenty of room. So we'll be watching what this does. That big 2,000 level in the futures, be a huge sticking point. And let's just take a look at the ETF, which of course is going to look similar to that, but it's coming into some messy looking stuff. It's so hard. One of the things that when you see this kind of a pattern, meaning a consolidation like that, and then you get a move above it, and it's a bit of, it is a little bit of a range expansion bar. Things backed off at the end of the day, but it becomes a really important point. Of course, that makes sense that it holds that, because it had a resting period, and then it breaks higher, and after a resting period, it should keep going up. So bringing your stop up here, that makes sense. Well, it's beautiful. Everything's beautiful as long as it stays beautiful. And I'm replying to a comment in the green room there that, yeah, this is a bullish pattern. That's why I'm mentioning what I'm mentioning, is that this is, beautiful, bullish. And so rather than pulling back after a big move up, creating, this void, right? It creates support. This is the idea of creating support, or just, if you just think about it from the point of view of a base in an uptrend, that demand increases and builds or creates support. And then as prices break higher, it's positive, and you want to see that level hold, right? When I drew there, and it just continued to go higher. So when we look at patterns, we recognize we patterns from the past, pattern recognition. We understand shallow pullbacks, flags, and flags come in different variations. This is a little shallow one. And then prices move higher. They shouldn't come back down. Otherwise, longs start to say, hey, this thing ain't working. Let me kill it. Is there a method to determine the strength of a base in an uptrend? No, meaning, so Robert is asking me, look, as you look at different time frames, you get different pictures, right? And so while this is messy down here on the daily chart, the length of time that a base forms suggests it's stronger. Now, as we look at a base, we look at individual bars, like something like that, where it initially broke below and sprung back up again. So while we're seeing what's developing, that's what tells us in the moment that it's strong. Now, what I'm saying here, if it breaks down below that, who cares what it looks like? So you want to be cautious about what you see in the past, creating a belief that something is strong. And as long as it stays above here, and so this consolidation, we have rules, which and one of those rules or concepts is once you get a wide range bar, such as this, you want to see the candle bodies stay in the upper 50% of that bar's range. So even if it dips down and forms a bottoming tail bar, it comes back up into the upper half and ideally the upper third. You're getting confirmation of the past. So we see the past. It creates a belief based on the pictures that we're seeing that tells us, hey, if we're seeing this pattern and I see this bar, it tells me to buy above these highs. All right. So our whole method is about creating beliefs that are built on past analysis about what it suggests in the future. Now, bar by bar analysis is a concept that guides us as to what's happening now so that we can adjust our beliefs based on the now, not on the past. This is why people don't take stops, because they have a belief system. Well, if they believe in stops, right? Most of us don't have any idea of what a stop is when we start out, but they have a belief system built on the past so that when prices come down and hit their stop, they're confused. How the hell could that happen? And now they got a problem. Right. Go through the MTS course again, listen to it, repetition. I mean, two reasons why we don't do live courses anymore, Dan and I. First of all, we did them for many, many, many years. They're exhausting to talk, 9+ hours a day for 2 days in a row. You're just wiped out. And while it's all good and you can ask questions in the moment, you become brain soaked with information. And so while with a recording, you could listen to it all day long or turn it off, come back, and then come back to it again, and it's yours forever. And it's so much better way to do it. By the way, I haven't logged into a course myself, but we added the ability to be able to send us messages, meaning there's some kind of, I got to log in and actually check it. It was turned on this week where you could, and it depends, like if you got the older software, it's not going to work, but we've updated newer software. And if you don't see that in your course, we can switch your course to the newer software. But anyway, you can send us questions. Now you could always email us, of course, but it's incorporated into the course where you can send us messages and we could respond. It kind of opens up to a chat thing that, we can help in, and so, while we may not respond in the moment like a live chat, you get what I'm saying. Bill saying he liked doing them. You know what, Bill? And I enjoyed watching you doing it because you always made me laugh. It was always good. And I never forget one comment that you made while you were doing a TPM2 course, where it was about the psychology, and I forget which one it was, but one of the concepts in there was about getting back on the horse after a losing streak. And you said the first thing to realize is that the horse is dead. And I thought that was hilarious. But it's like it was your way of just saying, hey, things aren't working. So, accept that. That was really good. All right, let me continue here. Yeah. All right. YM flat, doing nothing. It's coming up into this resistance area. Look to the left. We looked at the Russell. The dollar's not moving here. Things are just waiting to see what's going to happen. It is up against this pivot high. So it'll be interesting, of course, what happens after the announcement and what the chairman says and the reaction to all of that. 2 o'clock, 2:30, gold doing nothing. Yeah. Crude oil, bouncing off of support. Bitcoin up a little bit, but that's just such a mess. It's just a good pattern to just stay the hell away from it. The 10-year just flip-flopping around here, doing nothing. 13-week, it's pulled back a little bit. It says anticipation of them stalling. So markets have moved up. A lot of positives happen after this extended period of, going nowhere, which was about 6 weeks. The transports have improved. They're up against resistance here. So look, the transports, big improvement, the Russell improvement, and whatever corrective price action we're going to get, ideally it won't be too severe after this options expiration, and this market will continue higher. All yours, Dan.
Good morning. And the market acting this bullish with, we like, I'm not a fundamental trader, but I'm very shocked how resilient it has been. The interest rates are where they are, 5.25, 5.5, whatever. And we're almost near all-time highs. So it's it just makes you think, when you're in bear market panic modes, that that's the time to start accumulating. And we did. I remember way back here, we were hoping for another 10 to 20 point nosedive. It didn't happen, and we loaded up here. We got our ETF letter in about 9 different things. So we're participating not only on the major strong ETFs, but I got to say, we've done a phenomenal job trading these catch-up trades, bottoming patterns for the most part. We just sold this. Plug was another example, bottoming pattern. We just sold it pre-market at $12. It could go to 13, but we're in here and we're getting out here on a big old gap. Just take it and go on to the next bus. A trade to me is just another bus going by. So very good. I hear dings, but that was not you. All right, this Mitter, I rarely trade pre-market unless it's a quality pattern and I can read the chart with liquidity. So I just gave this. I don't know. I guess this thing just popped up. So it's a red bar ignored, inverse head and shoulders, breakout daily, weekly. And so when I saw it, it was up here, 308. And I said, let's bid 304, save a few pennies. So we just got a no. No, it isn't, Alex. I mean, for the subjective people, yeah, it might hit its head there. But in terms of this multi-month, believe it or not, wow, Greg, I've rarely seen this. We actually got a Head and Shoulders within a bigger Head and Shoulders. So that this is the Head and Shoulders that I was focused on, but here's a left shoulder, here's a head, there's 100% retracement. So the reason I'm saying that, Alex, is no. It has a void on the daily, weekly. I think 350 is in the cards for this little guy. All right, what else? These healthcare things has to be, Alex, 99%. But I didn't look because I don't care. I don't care if it's a CEO got fired. And the only news I really care about, seriously, from a trading standpoint, is accounting irregularities. I don't like that. Hey, Rangan, your drop down, please. That's what Rangan just said, claimed to use AI. Talking about AI, I got this this SOUN on my watch list. Remember sound, pound. It's neutral right now, but that blast off was AI related. Trading range, it's just going to put it on my list. So let's see, these guys are getting killed. Humana, that is a nasty gap. That's nasty, nasty. So I don't know what to do with them, but whenever I see nasty gaps from a real company, I guess I'll call it, I'm going to watch them with the intent to try to make money. And the chart will tell us whether I'm going to trade with or against the gap. Being is that what MTT thing is? I don't even know what they do. That's so funny. You know what? Yeah, I have a bunch of professional degrees, and my mom was a psychologist, and she used to tell people, "Oh, what does your son Dan do?" "Oh, he's a professional gambler." That's and I just let her believe whatever she wanted to. So I don't even know what Matterport is. I'm a chart reader. So yeah, UNH started all that mess. Yeah. All right, let's continue here. These metals are more bottoming patterns. X was on my list yesterday as a beautiful little buy setup from a bottoming pattern. And look at the 15-minute chart. It was a gap and go, and I didn't chase it, but I mentioned it as an afternoon late day breakout. That's a textbook late day breakout trade. So for little day trading, that was nice. My email things. So let's watch Alcoa and any other metals of interest. Logi gapping down. That's a big old ugly gap. And look at this pattern, you all. This is a 100% textbook Head and Shoulders. Look at that. Now it must be an ADR with all these gaps, but look at this momentum move. Went up, got a little M top, and now it's gapping under this for the price void. So hypothetically, if it were just gapping to this prior low or a little bit under, I would say short a 5-minute low. Bearish gap, Head and Shoulders, price void. Problem is, I'm gapping too big. Really, Microsoft's after them. All right, AMD. We had a beautiful call spread yesterday. We made 80% of the max value, so we just took our gains yesterday. There's some, I think, 2 bits of news. They're trying to compete with NVIDIA. You know, I'd say good luck. In sincerity, I mean, good luck. Do it. But I think NVIDIA was just unquestionably the leader. But number 2, there was some news about maybe Amazon using some services. All right, remember this T. All right, today MT Live, we're going to be talking about Climos and W bottoms. And this is not a classic W bottom, but it was a Climo, made a new low and reversed. Now we have a little buy setup. So set an alarm at yesterday's high. You have a bull 1, 2, 3 on the weekly. Nike, again, it's not classic W bottom, but it's a Climo, gapped up and went sideways. And that's why you need Greg's course, because you can't just in a box say, oh, well, that's not like the picture that is a double bottom. Well, guess what? It's the same effect if you know how to read prices. So I got this as a put spread idea for next week, and then maybe 30-minute high would be some type of call divot spread. Maybe we'll see. Now this one's also a Climo, but this one just kind of looks dead. It can't. It would be a good put spread candidate under here, but there was no juice. Splunk. Somebody emailed me today saying they wanted to do a call spread on this 103 call spread for Friday, and I said no. I mean, it's actually, here's your flag pole. It's bullish consolidation above the 20. The weekly is fine. I like it more as a 97 put spread. But I told him, I said, or you can do a condor. But then you got, we got Fed news, obviously. All right, NEXT, there's a pro gap. Gapping over that entire trading range. And that's a pro gap. I'll put that in the window. Oh, it's Abbott talking about double bottoms. Now this is a textbook W bottom. Momentum move, went up less than a third, and you got some type of reversal. It could be at the prior low, above it, below it, it doesn't matter. Been price avoiding. So we actually entered this yesterday with long calls. I'm going to be looking to sell. I'm going to be looking to sell half at the open once it settles down. My alarm on EQH just went off. Oh, this emitter getting slammed back down now. EQR, we entered a half lot yesterday. So you can do the back half into this little gap fill. EQH. Florida alarm, we just looked at that, the Climo, but I'm not messing with that. Starbucks is a double bottom. Textbook, that one's textbook. Nike's not textbook, but this and Abbott are textbook. Double bottoms. So we already have a put spread on this. I'll keep an eye on it to do another put spread for next week, plus maybe 30-minute high directional. Let me set a new alarm here. This looks great. Let's put it in this. Oh, really? I did not get around to doing. That is a textbook W bottom. Now, with our approach, I look at the broader market sector, relative strength, multiple timeframes, and that's what's I'm holding off on longs because the broader market. I put in, unless you decide, which is a judgment call. There's no definition of it. Unless you decide it's on its own page and it don't care about the markets pulling in, then I prefer to wait. All right. Our H up alarm, we're in this from yesterday. Another bottoming pattern. Another bottoming pattern. All right, I'm going to tighten the stop just to protect gains ahead of the FOMC. 276.38. Oh, I already moved to 276.22. Oh, which was like, what did I do wrong? 276.38. Oh, okay, that's near break even, so that's not up much.